Today, Bitcoin rises to wrap the month of October. Coinbase earnings beat estimates fueled by robust trading volume. And Robert Mitchnick, head of digital assets for BlackRock, breaks down the growth of the asset manager's spot Bitcoin ETF, IBIT. Welcome to CNBC's Crypto World. I'm Mackenzie Sigalos. Major cryptocurrencies are trading higher to close out the week and the month of October. As of noon Eastern, Bitcoin and Ether climbed more than 2%, with Bitcoin rising to the $110,000 level and Ether moving closer to $4,000. Solana rose 1.7% to $188. But for the week, major cryptocurrencies, they're actually in the red, with Bitcoin down 0.5%, its third weekly loss in the past four. Ether is down about 1.8% for the week as of noon, also making its third weekly loss in the past four. And then Solana is 2.5% lower for the week. The cryptocurrency's third weekly loss in the past four, just like Bitcoin and Ether. Now, for the month of October, major cryptocurrencies are trading lower, with Solana falling the most by about 10%, breaking a 6-month winning streak. Bitcoin is down more than 3.5%, its second monthly loss in the past three. And then Ether, it is down nearly 7% for back-to-back monthly losses for the first time since April. Okay, let's talk about the top stories. Coinbase shares popping after the crypto company posted better than expected financial results yesterday. The standout quarter was largely fueled by a resurgence in retail and institutional crypto trading on its platform. And this comes even as cryptocurrencies are now just one of several assets at the center of Coinbase's everything exchange vision. Now, in Q3, net income topped analyst expectations, rising to $432.6 million or $1.50 a share. That's up from $75.5 million or 28 cents per share a year ago. Revenue rose to $1.87 billion from $1.21 billion in the same quarter last year, also higher than analysts expected. The crypto exchange's beat came amid a boost in crypto trading, fueled by U.S. federal regulators' continued efforts to scale back regulations on digital asset firms under President Trump. Also, steadying trade relations between the U.S. and China during the summer months improved investor sentiment. Consumer trading activity jumped 37% from the previous quarter, and Coinbase also benefited from a market increase in revenue linked to institutional activity on its platform. That boost came following its nearly $3 billion acquisition of derivatives exchange Deribit. As of noon, Coinbase shares jumped 8.5%. Next, shares of Strategy are also on the rise after the company reported third quarter earnings that topped analyst expectations as well. The Bitcoin holding company posted a net income of $2.8 billion in Q3 compared to a net loss of $340 million a year ago. EPS came in at $8.42 a share compared to LSEG estimates of $8.15 per share. And on the Bitcoin front, the company reported a 26% yield year to date on its Bitcoin holdings as of October 26th, compared to its full year target of 30%. Now, Strategy's Bitcoin holdings gained just under $13 billion for the year as of October 24th, compared to a target of $20 billion. Of course, Bitcoin jumping 18% year to date has helped Strategy make those gains, and Michael Saylor told us earlier this week that he expects the cryptocurrency to top $150,000 by year end. As of around noon Eastern, Strategy shares popped more than 7.5%. Last, SEC Chair Paul Atkins joined CNBC's Squawk Box this morning, where he discussed the government shutdown's impact on markets, but also weighed in on President Trump's pardon of Binance founder Changpeng Zhao and the pushback the move received. Chair Atkins was asked what he thinks about the potential credibility issues that the pardon creates in the marketplace.
The president has powers for pardoning, and so his decisions, I think, we obviously follow them, and I think the market ultimately decides what happens to various companies and investments and the like. So clearly, we are focusing on our obligations as far as overseeing the market and enforcing the laws, and so we will abide by that and obviously go forth with respect to those sorts of things.
This week, Democratic Senators Adam Schiff and Elizabeth Warren invited lawmakers to join a resolution condemning President Trump's decision to pardon CZ. The senators also called on their colleagues in Congress to use their authority to stop, quote, blatant corruption. The letter says President Trump pardoned Zhao after he reportedly worked to broker billion-dollar business deals with the Trump family's crypto companies. The president addressed the decision to pardon CZ during a press conference last week, saying that he granted the pardon thanks to lobbying from CZ's supporters. Zhao pleaded guilty to enabling money laundering on the Binance platform in November 2023. That guilty plea was part of a massive $4.3 billion settlement between the crypto exchange and the DOJ. Now, CZ stepped down as CEO and served 4 months in prison. All right, let's turn to spot Bitcoin ETFs for our main story. They remain the gold standard for crypto funds on Wall Street, even as altcoin ETFs come to market, and negative flows have hit spot Bitcoin ETFs in recent days. One of the clear winners, though, in this space is BlackRock's IBIT, which now boasts over $85 billion in assets under management. I spoke with BlackRock's head of digital assets, Robert Mitchnick, about the fund's path to $100 billion in AUM, where Bitcoin ETFs fit in a portfolio, and more. So IBIT is clearly the big winner in the Bitcoin ETF race, on track for $100 billion in assets under management. And we have seen some outflows across the board over the past couple of days, negative flows really hitting every Bitcoin ETF at the moment. What do you think is driving that? And is this a broader risk-off move or something more specific to crypto?
Yeah, well, I think we're still seeing the after effects of that October 10th flash crash in crypto markets. And, that was a really interesting episode. I think it shone a light on some of the potentially more concerning aspects of current trading activity in this space. You've got a tiny percentage of the overall market cap of crypto and Bitcoin specifically. It's about 2% of the market cap of crypto in leveraged futures, and yet they're somewhere like 70% of trading volume with a lot of leverage, right? And so this tiny portion of the market can have a really disproportionate effect on price moves and volatility. That's what we saw in that October 10th flash crash. Obviously, major corrections across the board. Some cases, 50% intraday corrections in smaller crypto assets. Even Bitcoin was down 14% at one point on the day, and so that definitely, has a bit of a chilling effect for at least a couple weeks after something like that happens. And I think that's kind of the overhang that we're seeing.
Now, the pitch of Bitcoin ETFs is diversification without the friction of a crypto exchange or wallet setup. But is it really functioning as a digital gold replacement or something else entirely, especially since gold was hitting record highs while Bitcoin sold off?
Yeah, well, gold, of course, has come back a fair bit too in the last week or so after that record high. And what we see oftentimes is that when you zoom out, they tend to move in sort of medium long-term cycles together because they have a lot of the same drivers. And then within an even short-term period, sometimes one is rallying and the other is sort of flat, and vice versa. So that's kind of what we've seen here. But it goes back to, there's kind of two levels in this market. There's a top layer, which is very sort of short-term, speculative, often trading with leverage, that does treat this as sort of a levered NASDAQ almost asset, even though that doesn't make much fundamental sense, and that creates the volatility. And then you have this much larger lower layer, which is more sort of long-term institutional buy and hold, wealth advisory type investors, and they tend to ultimately accumulate on those dips in the aftermath of some of these volatility-driven sell-offs.
Now let's talk about that path to 100 billion. IBIT has dominated the space, overtaking GBTC despite its head start. Why do you think IBIT has resonated so much more with investors, particularly institutions?
Yeah, it's been quite amazing to see, frankly. Obviously, we had high expectations for this, but not to the full extent of what we've seen. And what's happened is IBIT is overwhelmingly resonating with investors of all types in terms of a preferred Bitcoin exposure vehicle. Of course, there's lots who do and will continue to hold directly, and that's great and healthy to have lots of options in the market. But for institutions, it's made this a very turnkey, accessible, convenient way of holding it through trusted providers, not having to worry about operationalizing custody for financial advisors. It's a way of helping their clients consolidate assets onto their platform, be able to do things like borrow against it, do tax and estate planning with it. And even for lots of retail investors, they're finding it just to be a convenient, low-cost, preferable alternative.
What kinds of conversations are you having right now with institutions about allocating to Bitcoin ETFs? And are these mostly hedge funds, pensions, or RIAs dipping in for the first time?
Yeah, well, the biggest conversation gets back to what you alluded to at the start, which is trying to understand the risk and return drivers of this. Because when you look at it fundamentally as a global, scarce, emerging monetary instrument that looks a lot like digital gold to many people, and that is detached from the risk factors that affect any one country or their economy, monetary, political, fiscal situation, et cetera, that looks like a diversifier and a hedge on a fundamental level. But then you see this noise in terms of short-term trading episodes where people talk about risk on. That's a bit of a dubious concept to begin with, but especially so when you try to apply it to Bitcoin, because Bitcoin clearly is a risky asset on a standalone basis, but in a portfolio and with very different return drivers, it can play that important diversifying role. So you see these episodes where you have the leveraged perpetual futures kind of create outsized volatility relative to what they really are as a percentage of the market. And that gives institutional investors pause. And they said, well, we kind of get the thesis, but we really need to understand where do we think long-term correlation's headed, and is it actually going to behave the way we think it fundamentally should. And our view at BlackRock is over the medium and long term that it will, but certainly institutional investors are paying a lot of attention to some of that trading behavior.
Now, your ETF can be used as collateral. JP Morgan announced that it would start accepting IBIT earlier this year. Is that part of your long-term vision for how these funds integrate into traditional finance?
Well, it's actually amazing what you can do with the ETF in this category that has appealed to a lot of these large Bitcoin holders that have wanted to move some of their exposure from Bitcoin into IBIT, and certainly being able to borrow against it is one reason for that. So JP Morgan was out in front with that. Now there are a number of private banks evaluating being able to offer that. And then you've got, as I mentioned earlier, tax and estate planning becomes a lot easier. You can do certain things with options in terms of hedging, income generation, other ways you can sort of create tax efficiencies through an advisor with the ETF. And so we're just really scratching the surface, I think, of how people are thinking about that. And so it was exciting to be able to do the in-kind conversion starting in August when the SEC approved that.
Do you think that collateral use case could eventually extend beyond banks, for example, into derivatives, lending, or even tokenized finance?
I think so. I mean, ultimately, you have today lots of exciting things going on in the crypto space, and now people accessing those through the ETF, which is a traditional finance wrapper. And then you've got traditional finance assets that are being tokenized. People are accessing those in a digital asset wrapper. And ultimately, we see those two worlds converging in a way that kind of brings forward the best properties of both.
Okay, that's all for Crypto World this week, but we will be back again on Monday, and we'll see you then.